everyone. This is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of September 8th, recording this on Sunday, September 14th. Coming up next week is a big decision from the Fed. Everyone's waiting to hear what Chair Powell and the FOMC members decide. This is on September 17th after 2 p.m. The market will find out about the rate cut decision. We'll look at what the FedWatch tool is telling us with a very high probability of a 25 basis point cut. We know that Fed has shifted their mandate from concerns on the inflation to more towards the employment. 911,000 jobs were downward revised for the year of 24 through March 25. So from April 2024 to March 2025, 911,000 jobs were downward revised. We know that the August was very worrisome job. 75,000 jobs were expected to be added. We only got 22,000 jobs added. Unemployment has been ticking higher from 4.1 from the last 3 months, June, July into August, 4.1 in June, 4.2 in July, and then the most recent one at 4.3. So Fed's now focusing on employment. They're concerned about the deteriorating employment conditions, and they are definitely looking at a 25 basis point cut. There is a slight probability of a 50 basis point cut. So what we will do is we will look at the US Treasury 2-year chart. We'll look at the two-year yield chart, the weekly chart of that. We'll see what technicals are highlighting on that. And then we will look at S&P 500 just from a technical angle. If we don't get, the 25 basis is almost a guarantee, but Fed is also going to kind of share the dot plot, which they do in a quarterly basis. So March, June, September, and then December, they release what they call as summary of economic projections. All the Fed members take their pens and they do a dot plot. They kind of give you indications of where, as of current economic condition, where the rate cuts are going to be for the rest of the year into 2026. So if those rate cuts from the dot plots aren't as dovish as the market thinks, it could lead to some bit of a sell-off because we know that we've got an astronomical rise. So from discussing the S&P 500 and some technical indicators that show some bit of a deterioration in the market's breadth and strength, we will look at a very interesting article that came out on Marketwatch talking about a melt-up. And the best example of a melt-up was what happened in the most recent earnings of Oracle. This is a company Larry Ellison, of course, founded. He's now contending over Elon Musk as the richest man. Of course, Tesla shot up huge last week, so now Musk has taken over Larry Ellison. But the day Oracle earnings came out, the stock jumped tremendously, over 40%. And so did the market cap, and so did Larry Ellison's worth. So he became the richest man for a couple of days till then Musk took him off last Friday. But that said, the melt-up, a great example is Oracle. We look at Oracle's long-term monthly chart, how it has gone absolutely parabolic. It reminds us a lot like Cisco that happened in the dot-com peak and how sharply it pulled back. So we're looking for something similar with Oracle because technically Oracle missed their earnings, both their earnings and revenue for the current quarter. And the entire year's AI-related infrastructure, which is really their key growth. It's not their software part of the database business or their application side of the business that's growing. It's really their huge investments into GPU and basically serving the AI needs of the world to their data centers. That's where they see massive growth. What they're capitalizing on is that Stargate deal that President Trump announced right after his inauguration in January. That's a $500 billion deal between Masayoshi Son from SoftBank in Japan, OpenAI being the software vendor building out on that Stargate, and Oracle being the infrastructure vendor. So that $500 billion deal is what Larry Ellison kind of put back into his revenue projections for the investors for the next 5 years. So even though they're only going to be making less than 20 billion, maybe 18 billion for infrastructure cloud revenue in the current fiscal year, by 5 years, he's projecting that to shoot up to 144 billion. That's over 7x in the 5 years. That's what caused the Oracle stock to shoot up. We look at Oracle's monthly chart again, how it shot up in a very parabolic fashion. That's an example of a melt-up. And so from the melt-up into Oracle, the other AI plays, of course, the king of AI, NVDA. We look at NVIDIA's monthly chart. We look at another huge beneficiary from a true software spending and software growth, Palantir. Oracle is not software. Oracle is playing more of the AI infrastructure, GPU kind of on the data centers. Palantir is a very pure play software, massive spending in the defense and in the commercial customers. So Palantir's melt up kind of climb, parabolic climb. We look at Robinhood. We know it's an extremely popular stock. The Millennium, the Gen Z, they are actively trading in Robinhood. So that stock has been going up also in a vertical fashion. We look at that. And a key beneficiary of the AI play has been storage. A boring stock like Seagate has absolutely gone vertical. Let's talk about a melt up on that. So we look at Seagate's monthly chart as well. And then, of course, a poster child of AI, more from the autonomous driving and the Optimus robots. That's really going to give you the next generation AI feel is Elon Musk's Tesla. That had a vertical kind of a move after a breakout on Friday. We'll look at what the Tesla's chart is telling us. We believe the measure target is over 500. So the breakout has just happened. We believe the momentum continues and Tesla likely, climbs over new all-time highs above 500. We're going to then talk about cryptos, Ethereum and Bitcoin. Those are right now cyclically the most bullish part of their climb. They've had that pullback. This time they front loaded. Typically, the pullback comes in September. We'll look at the monthly charts and look at what happened in 2021. Every 4 years, Bitcoin in particular has a halving related kind of a parabolic kind of a jump. So that typically happens into the months of October, November. With a September pullback, this time we got the pullback in August instead, and now setting up for a solid move. We've already taken over the range from Bitcoin in particular. If you look at its candle, we'll show you that how it is already now from an inside candle on the body of the candle has become an outside candle. It's looking bullish. So we look at where Bitcoin could be climbing, where Ethereum could be climbing, and then if the melt up scenarios on the equity market happens for the next few months, how high can QQQ rise? How high can small cap ETF IWM rise? And how high could the S&P 500 rise? We look at those three charts from the daily charts and look at where the melt up targets could be on those three particular QQQ, IWM, and SPX. So with that, this is our Charts are Fun Substack site, chartsarefun.substack.com. We appreciate you subscribing to it. It's free. When the blogs get posted around 7 a.m. in the morning, you'll be emailed as soon as the blogs come out. Our YouTube site is also Charts are Fun. We do believe charts are fun. We believe the tremendous insights in charts that helps you in your trading decisions. So if you could subscribe to our channel, we really appreciate it. And then if you could hit the like button if you like the videos, we also appreciate that very much. I'm going to go right into the FedWatch tool. This is kind of that marks a probability on the Fed rate cut into the next meeting, which we know is September 17, this Wednesday. Currently, we see at 93% probability of 25 basis point cut. So 400 to 425 because the current interest rate is 425 to 450. So 4 to 4.25% is 93% chance of that cut. A 50 basis, some haven't ruled that out, is at 6.6%. The next couple of days, this does change quite dynamically over the Monday, Tuesday. We'll see till the rate cut decision comes at 2 if this changes much. But at this point, there's a higher likelihood of a 25 basis. Some are thinking that Chair Powell could, because he did not do the July decision, because he was blindsided by the employment data. The bad employment data didn't come out till later into August. So he may, to kind of make up for the fact that he did not do a July cut, do a 25 basis for the July now. Kind of retroactively the July, apply it now into September, and then of course the September being due for another cut. So 50 basis is what some of the true, call it doves. And it's a divided Fed. We know that not everyone in the Fed agrees to such a dovish stance. Chair Powell himself is being pretty neutral, more leaning on the fact that he's concerned about inflation, causes of cuts leading to higher inflation. So he's been extremely conservative about these cuts. So we'll see. He at the end chairs the FOMC. He is going to make that decision. We feel that being his kind of more on a very neutral side and very data dependent may resist the 50 basis because the market is already at all-time highs. It might only add further fuel to the fire and cause the melt up to even worsely shoot up. Because remember, melt ups come down with meltdowns. Melt ups are never healthy. When you get such melt ups, usually that's euphoria, usually that's retail investors chasing stocks higher. And then it leads to meltdowns with sharp pullback. So looking at all of that, Fed may be very, at least Chair Powell under his leadership may be very cautious doing a 50, and if any, may do definitely do a 25 is what we think. But we'll see. If you look at the 2-year Treasury yield chart, and this is a weekly chart, we can see kind of a range that it has been trading in on the low side at 3.5 and 5.25 on the upper side. And this has been doing it since 2022. So the last 3 years, it's been in a rectangle range. Some people here could call this as head and shoulder, though the left shoulder is higher than the right shoulder with the neckline at 3.5. So if you take the neckline around 3.5, the left shoulder at a 5.0, like 5.08 from the early 2023, the 5.25 is the head, and the right shoulder a lot lower at 4.43 that came around December of or January of 2025. That said, if you look at the last 6 to 9 months, lower lows in the yield, but higher lows in RSI. That's a positive divergence, indicating to us that while the market thinks that, well, there's going to be a breakdown below 3.5, if it does, then the bond bulls will rejoice because that breakdown from 3.5 to 5.25, you're talking about 1.75 percent drop from 3.5. So 1.75 from 3.5 takes us towards 1.75. That would be the measured target on that downward move. That could mean, imagine about that, it could mean Fed funds rate below 2%. Currently, it's at 4.25. You're talking about from 3.75 to 4.25, 250 basis point cuts. That means 10 cuts of 25 basis points, or maybe several 50 basis points coming. Now, anything can happen. If we are going into a recession, if the job market is giving an indication, usually job market is not a leading indicator, it's a lagging indicator. So this could perhaps improve. But if we do have a recession, if the economy really starts tanking from these after effects of these tariffs and so on, we could at the end, recession can cause the yields to come down and recession can cause the bonds to rally. So the many ways, the bearish view into this is the bonds will rally huge and the yields will come down. But given the positive divergence here with the higher lows in RSI as you have slightly lower lows in the 2-year yield, we believe that 3.5, 3.4 may act as strong support. And from here, we may have a little bit of an upward climb in yield, as in when the Fed to the summary of economic projection dot plot doesn't give as bearish an indication of the number of cuts, the market may at the end may start rallying the 2-year yield. Not rallying as much, the bond selling off, but the 2-year yield going higher is possibilities what we're looking at. So the 2-year yield chart is at a key level. A break below 3.4 takes us all the way to 1.75. Then this positive divergence will obviously be invalidated. You can expect RSI to sharply decline to set new lows. And same thing with MACD is going to decline to new lows. That's what we're going to watch. So next week is key. Wednesday after FOMC, we'll watch, and we'll next week's video that we will do on Sunday, prepare to see something about, that's on September 28th when we do that video, prepare to see something about the 2-year yield. We look at this chart again and see what did the Fed rate cut do to this. But right now, this positive divergence is giving us an early indication that the market may not get as many cuts as it's thinking. The 2-year yield could start climbing after the FOMC decision. S&P 500 had a beautiful inverse head and shoulder, starting off from the 5700 as the neckline, the left shoulder here that we got into late March, the head at 4835, the April 7th low, a right shoulder that happened into early May, a breakout. So 4835 to 5700, we're talking about in this particular case close to 865 points. Add 865 points to 5700, that's 6565, 6565. That's the measured target that we show here. We exceeded it. What is the target? What is the high for this week? 6600. So we exceeded it by 35 points. That said, negative divergence is clearly flagging a kind of a concern here. Lower highs in RSI as S&P is climbing higher highs, lower high in MACD as S&P is climbing higher high, and the 50% of stocks of S&P above the 50-day moving average is also showing negative divergence, declining since its peak in the early July timeframe. Every time the S&P keeps climbing, the percent of stocks above the 50 is setting lower highs. So lower highs in RSI, lower highs in MACD, and lower highs in percent of stocks of S&P above 50-day moving average. Negative divergence here indicates that S&P might be setting up for a pullback, and we wouldn't be surprised for that pullback to come as deep as testing the 200-day moving average, which right now is near 5984, getting closer and closer to 6,000. So pullback to 6,000 with like little more than 10%, 10 to 12% cannot be ruled out looking at these negative divergence. That said, if you look at the technical indicators, this is the S&P percent of stocks above the 200-day moving average. We can see that that also is kind of declining as in lower highs since the August 11th high, like the August high at 71%. So at around past August 18th, we had 71.6 or 72% of stocks above the 200-day, since then 69, and most recently around 68. So lower highs in the percent of stocks above the 200, lower highs in the percent of stocks above the 50-day moving average are both indicators of some form of a pullback. Also look at how far the S&P 500 has diverged from its 200-day moving average. That's a lot as well. From 5984 to 6584, you're talking about 600 points. 600 points from a 6600 is a 10% deviation from the 200 days. So the current S&P level is 10% above the 200 day, which is a wide deviation when you talk about the, reverting to the moving averages every once in a while. That's how the market cyclically goes higher. That's a wide deviation from the 200-day moving average. So from the law of averages, it's setting up for that pullback because it's diverged a lot from the 200-day moving average. Now, also, if you look at the bullish percent, this is from point and figure charts, that's even painting a negative picture in terms of lower highs since May timeframe. 76.4% of S&P 500 stocks were bullish in a point and figure chart perspective. That into July came at below lower high at 76, and more recently into August and September, much lower values and in the 60s, low 60 levels. So this is also setting up for a breakdown, as in when you saw the breakdown back in the from like last year, the same thing happened. The market didn't peak till February and then dropped. But before that, look at how negative divergence with the bullish percent weakening all the way from October into November, into December, into February, lower highs, and then the breakdown. Similar way, lower highs and a breakdown is possible, like we saw here, potentially setting up. So that bullish percent index, percent above the 200-day moving average, and S&P's negative divergence are all indicating good chance of an S&P pullback in the next few months or weeks for that matter. Now, I talked about the CBS Marketwatch. This is the Marketwatch publication, and they talked about a relentless rally that could turn into a melt up is what some of the Wall Street pundits are expecting. What is a melt up? It means, classic example of that is Oracle. Oracle, if you look at its chart, that's what a melt up does. It's vertical. Not too far back in the April low of 2025, it was trading at 118. Guess where it tested after its earnings? Went and tested 345. In fact, if you look at the percent gain month over month from July into August, is showing 29%. But if you really look at 220, is where it ended the month of August to September, 220 going to 345. That's 220 to 345 is 125 points. That's over 50% climb in a span of just a couple of weeks, because August just ended 2 weeks ago. In a span of a couple of weeks, Oracle jumped 50%. That's a multi-billion dollar stock, hundreds of billion dollar market cap jumping like that. Absolute crazy. But guess what happens when you have those melt ups? Meltdowns come, and look at the pullback. From that high of 345, we've already pulled back below 300, now at 292. So that's almost close to 292 to 345. You're talking about close to 53 points or so. So 53 points out of 392, you're already talking about more than 12% 13% has already happened in terms of the pullback in the last week after that parabolic vertical climb, a melt up, and then a pullback. NVDA is another classic example of a melt up. Look at its vertical climb. It was trading at $14 not too far back in 2022. ChatGPT came and everything changed. The whole dynamics of GPUs, the world thinks about AI as the kind of the next big revolution like we had with the internet. And as a result of that, NVIDIA is the biggest beneficiary selling the GPUs to the world to run all that AI. So look at its climb from 14 bucks all the way to 184 was the recent double top here and then a pullback. That melt up could also have at some point a meltdown. A very vertical climb is what we are watching. Palantir is another classic example of a melt up. Was 20 bucks into 2024 around April of 2024. 20 bucks went to 190. A factor of 9x over 9x, 9.5x is what it climbed. And then from there, it's kind of look at this candle, a very, very spinning top kind of a candle with a very high wick on the top and in the bottom with a short body. That's classic spinning top reversal. It kind of touched the peak at 119 sometime in August after earnings, and look how far it pulled back and pulled back a lot lower, closing near the 150. So far in the month of September, as the momentum euphoria for Oracle and AI is beginning to climb, it has started climbing higher back to 171. We'll see if it can print another high, but look at how high the RSI on the monthly chart is, 94. This is not a daily chart, hourly chart. Monthly chart of RSI at 94 is way, way overbought. So this melt up will also have a meltdown. Just waiting and watching for that Palantir's meltdown. Robinhood, the most popular brokerage site, look at the last three candles every month, leaving a long wick. Those are reversal candles. Those are bearish candles. Yes, it's climbing higher highs, but leaving reversal kind of bearish signals as it's climbing higher. Look at the monthly charts RSI, 86.5. So also very, very overbought. Climbing higher, we will see how far it lands. But if you do a measured target from 6 bucks to 66, that's $60. At the 62 to 66, 126. Did it get there yet? It reached 123, getting to that target. So if you're taking this target of a cup and handle from 6 to 66, a handle to 29 and breakout, that 66 plus 60 is 126, 123. It closed around 115. You're talking about $11. $11 in the next few days. The way Robinhood climbs could come and we could get that target achieved. We got to see if it goes past the 126. Sometimes when you have these melt ups, they do go past the measured targets. Look at Seagate. This one has a measured target from 103, also a cup and handle. Left brim is lower than the right brim. 103 is the left brim on Seagate. This is the company that makes all the storage that goes into all these AI data centers, because when you got to have all these models built on the generative AI, you need a ton of data to be crawled, to be trained on the model. All that data at the end adds to tremendous, just insatiable demand for storage in the data center. So look at 103 as the left rim, the pullback to 43 as the bottom of the cup, going back to 112. So 43, 112.9 is 113. So that's $70. Added to 113 is 183. Did it cross that? It absolutely did. The high was 199. It came very close to 200. Look at its 80 is the RSI on its monthly chart. These are boring storage stocks, but look at how they're moving. This is absolutely melt up at its best with all these companies AI related. Oracle here is the melt up poster child. NVIDIA, talking about Palantir, talking about Robinhood, because it's all about AI euphoria driving into crypto trading, into a lot of kind of robo trading going on with many, many investors, retail investors. And Robinhood recently had their conference, their user conference last week. A lot of talk about agentic, a lot of AI stuff being shared in their user community. So that's another AI play. And Seagate, most boring device hardware kind of storage company, look at how it has gone absolutely vertical in this particular year. It was not too far back, 62 on the April 7th low, 62 to 195, factor of 3x. Absolutely amazing that a storage company can kind of hard disk device maker can make that kind of a climb. And then Tesla, which is really the poster child of AI with respect to the future of AI. Autonomous driving, this is like the 21st century in its true sense. No drivers in the car, autonomous everywhere. Then robots at all the dirty jobs, as they say, things that humans wouldn't want to do, cleanup jobs, all the various kinds of these humanoid, because they make robots that are in the shape and size of humans, but be going out there in the world doing a lot of these jobs. That humanoid robot called Optimus is supposed to take over almost, from Musk's prediction, 10 trillion of revenue over the next 10 years. So that's the projection that he thinks where Optimus can take over. Look at this chart. Higher high, 414, pull back to 101, to a higher high to 4, the 488 or so, pull back to 214 as the higher low. So if you say this is the wave one from the level at $14 in 2019 to 414. So wave one to wave two at 101, wave three at 488, wave four at 214. The wave five climb is about to come. If you look at its cup and handle from 214 to 367, you're measuring that as $153. 153 to 267. So that's 520. That's where we think the measured target on Tesla is. Had a beautiful breakout. This is showing the monthly chart, and it's got more higher highs in RSI and MACD coming. But just if you look at its daily, if I just pull here as daily, Tesla had a massive climb the last 2 consecutive trading days. You can see 2 solid bullish candles. It had $27 or 7% climb from 370 to 395. The day before on Thursday from 350 to 370. What's been in the news is Elon Musk's pay package. He's talking about $1 trillion pay package with the board kind of signing for it, but with a lot of commitments. He, in return for that pay package, is making commitments that he's going to make Tesla's revenue go into massive, like the 5 to the $10 trillion is the growth of where he sees Tesla. So he's basically getting a pay package ahead of doing some major things with the robotaxis, with his autonomous driving, and also with his humanoid robots. Ahead of that, he's basically trying to get those deals, and then he's going to do whatever he can to do his magical growth of the company to those astounding heights. Talked about crypto because this is also a great example of a melt up seasonally 2021. So the melt up of Ethereum in 2021, we can see how it shot up from 483 to 4865, a factor of 10x shoot up, right? That 10x shoot up, look at the pullback that came. That's an inside candle. Now, inside candles can be looked at the full range of the candle. In that case, it's not. But if you say inside candle with the bar, as in just the body of the candle, look at this red body is fully inside the white body the previous month. So September over August, that was an inside body on September over August. Then a massive outside body took over the full red and had a higher high, climbed all the way to 4865. Sharp pullback from there. That's how crypto winters do. They pull back 80-90% easily. So 4865 pullback to 883. Massive pullback. From there, it has retested that high, put a higher high than the previous 2021 high, which is bullish. If that breakout comes from 883 to 4955, you're talking about $4,100 added to 4,900, 9,000. That's where we think. And what would be astounding is if we can get the 9,000 in the next couple of months. That's a classic example of a melt up. Euphoria on cryptos, anything is possible. So be prepared. There's a reason why Cathie Wood has invested out of like she recently sold Robinhood and started putting her money into Bitmine, BMNR, which is Tom Lee's. He became the chairman. He put a lot of his money as well. This is a treasury stock on Ethereum, betting on a massive climb of Ethereum. So BMNR is a leveraged company, bought a ton of Ethereum. If this Ethereum shoots up to 9,000, BMNR is back above 100. I think it closed near 50, but you can expect it to continue its climb and go to all-time highs with Ethereum climbing up to 900. Another Ethereum treasury stock like Bitmine Immersion is what BMNR is. So ticker symbol is BMNR, Bitmine Immersion. The other one that is out there is called SBET. It's Sharpling Trading. It's the founder of Ethereum kind of took over as the chairman of that company, and it's like a SPAC that is a trading company that has been like a gaming company converted into an Ethereum treasury company. And it's taken a lot of his wealth, invested into Ethereum, and that's another one. So SBET. So SBET and BMNR are the two ones that you should watch for a climb on the Ethereum from breaking above 4,900 to go to 9,000. Bitcoin, interesting enough, had that pullback in September as well. And then to October and November, it climbed up to 69,000. This time that pullback, that inside candle, that body of the candle inside the July candle happened in August. So we front led that. Instead of having a September pullback, we had that in August. Already we see that the body is taken over slightly above the previous body of August. September body is taken over the range and about to climb. That climb, we can look shortly at the more of the shorter term chart, but this expected to keep climbing higher. What's the measured target on Bitcoin? Well, a conservative target, it could go a lot higher, is just the cup and handle from 69,000 to 15.5 to 73,800. So that's roughly 53,500, 53,300, 53,000, sorry, 58,300. So 15.5 to 73.8 is 58,300. 58,300 to 73,800 measures to 132,100. So that's a conservative target. We can see lower highs in RSI. We can see that the MACD histogram is weakening. Could be it, and we could perhaps from there have a pullback. But already it has gone parabolic. It has climbed a lot. It is double, almost like from 49K, it has gone up to 124K, pullback, tested a 107. So let's look at shorter term chart of Bitcoin. Here we can see a beautiful cup forming from 107, 117.4 was the left brim. So far, the right brim is 116.8. That 116.8 just near term. If you look at the 110 to 113.3, that's a 3,300 added to 113,300 is 116,600. It overshot that. So just that short-term cup and handle, 113.4, 110, 113.3, 3,300 added to 13,300 is 116,600. It's already touched that. Very close to the 117,000. We can see it's a key support in the past, which is now resistance. So 117 is close to the 116,000. That's a resistance. We could maybe get a bit of a pullback, but look at the bullish cross. This is a 4-hour chart, 240 minutes. Every candle is 4 hours of, and it's 24/7, by the way. So it's trading. This is active trading going on right now. Current price of Bitcoin at 11:50 a.m. on Sunday. The today we are at the Sunday, September 14th, 115,385. So there's a little bit of downward bias into Saturday, into today's Sunday. We shall see what happens. But if we get a dovish Fed, you can bet this is going to have a breakout right into next week and going to break 117. A measure from 107 to 170 is 10,000, add to 117, 127. However, if we don't get as dovish a Fed as the market expects, then this kind of a pullback, as you see here, this is the left shoulder, 117 to 111 to 117, then the kind of the head, inverse head and shoulder kind of pattern. So if we draw out an inverse head and shoulder here, let's just put an annotate and draw the inverse head and shoulder. So that's the neckline right there. That's the neckline. We have the left shoulder right here at 111,000. We have the head here at 107, double bottom test. 107 tested twice, 107,400, 107,300. So that double bottom test was done. And then we can get a right shoulder pullback. And that right shoulder pullback could take Bitcoin down towards this level here at 111,700, 112,000, and then that breakout might come. So here is what a potential possibility could be setting up. We could watch and see, but that's a possibility. So right here, 107 to 116, you're talking about 9,000. 9,500, 107,300, 269,500 added to 116,800. You're talking about 126,300. So that's a possibility as the next target. From there, we might then have a pullback and then further break higher. But that's possibility what Bitcoin could be doing in the very near term if we don't have as much of a dovish Fed. We're getting a 25 basis point for sure, but if not, don't signal significant more cuts as the market wants them to do, then we may get that pullback and from there then climb higher. QQQ, we're now going to talk about, end it with the melt up scenario. If the melt ups that we saw in all these stocks here, right, all the way from Oracle into NVDA, into Palantir, Robinhood, Seagate, if we get melt ups in QQQ, how high can it climb? Well, if you see this, let me just hover over here. That neckline is at 536 from a 401, or 401.94 is 402. 402 to 536 is $134. Add $134 to 536. That's measured to 670. So that's the melt up high. We are currently at 586. So you're talking about another 84 points or so climb on the on QQQ. So that's a possibility of the melt up high, that breakout. So if that right shoulder, so you see the left shoulder is 539, the head, the bottom of the cup is at 402, that right shoulder, the right brim is at 536. So 536 to 402, you're talking about $134 added to 536, 670. That's the melt up target on QQQ. What about IWM? IWM is a small cap. You can see that 229 is the left brim. The bottom of the cup is 171. The right brim is at 226, then a pennant shape handle, a breakout. So 226, 171, you're talking about $55. Add the 55 to the 226. 55, almost 226.7, 227, you get a 282. So that's the measured melt up target on IWM, the small cap Russell 2000 ETF. And finally, S&P. S&P, we already showed you the near-term target of 6,565. It met that. But a true melt up could be right here. If you look at the left brim at 61.47, that was the February high. A pullback to 48.35, that was the 21% bear market pullback, or the 21% tariff-related pullback we got to 48.35. Came back here to form the right brim at 6,059. So 48.35 to 6,059. You're talking about 1,200 points, 1,224 points. At 1,224 points to 6,049, that takes you to 7283. So that's closer to the 7,300 level is where S&P's melt up target is. We reached 6,600. You're talking about another 680 or 700 points climb of S&P, which is another 10% upside move from here. So in summary, FedWatch tool is telling us that a 25 basis point is almost secure. 50 is shorter probability of only 6%. We'll see what the Fed does. We'll see if they go with the more dovish people and do a 50 basis point instead. We feel the 25 is more likely, but the key the market will be watching is the dot plots and what are they going to do with the summary of economic projections. This positive divergence in the two-year yield is telling us the dot plot may not be as dovish as the market is thinking. And if that's the case, they may be data dependent. They may watch inflation very carefully. Then the two-year yield could climb from here. Versus if it is a very dovish and they say that 3 cuts this year, 3 cuts next year, then expect this to break down. The measured target on that breakdown from 3.5 to a 5.25 is 1.75. Subtracted from 3.5 is 1.75. So that's the potential Fed funds rate that could go from a looking at 4.25 to a 1.75, 250 basis point cut is what the market will start pricing in when it knows that you got a very dovish Fed. We don't think that's the likely scenario. The economy is doing pretty strong. GDP is still forecasted above 3%. If you look at the Atlanta GDP forecast, yes, the employment is weakening. We shall see what happens over the next few employment reports. But if the Fed's fund rate cut of the 25 basis point and a couple more might hold up the economy okay, then we may not need to see these yields come all the way lower. If it does come down, that would be super worrisome of a treasury yield coming down that much. That would be some major kind of a economic recession that would cause the Fed to be that dovish. So that's what we got to watch. S&P 500 near term is putting a bearish pattern with negative divergence on its RSI, MACD, and percent of stocks above its 50-day moving average. It has reached its inverse head and shoulder on its daily chart with the neckline at 57, bottom of the bottom of the head at 48.35. So that's 65.65. It exceeded it slightly to 6,600. So we'll see if this negative divergence takes over and we get a pullback in S&P. That pullback could be 10 to 12% towards the 200-day moving average below 6,000, closer to 59.84. That's a possibility. The negative divergence here is also there in the percent of stocks above the 200-day moving average, printing lower highs, and in the bullish percent index from a point and figure chart, printing lower highs in the bullish percent index. And currently, we can see that it printed 62%, like what happened exactly in the early part of the year. From October to December to February, lower highs in the bullish percent, and then the waterfall breakdown. Same thing is repeating now, lower highs in bullish percent as S&P is climbing. We could be prepared for a waterfall decline in S&P and the bullish percent with it. The melt-up rally is what some are looking at. Oracle is the poster child of that. Their expectation was only 18 to 20 billion for the current AI infrastructure spend. They're projecting by the next 5 years, by 2030, that to hit 144 billion. That's the number they're projecting. That took the market by surprise. Market loved it. Bulls rejoiced, pumped up the stock big time. So it's currently 29% up for the month, but at the peak, it was over 50% up from the month. From 226, it went up to 345. So almost 120 points climb. From that pullback sharply to 292 from the intraday high at 345 the day the earnings had come out. This is a classic example of a melt up followed with a meltdown. We're going to see what happens to the sharp parabola. NVIDIA is also looking toppy, has climbed up to 184 recently, two double tops, pulled back to 164. From there, came back high to 177, struggling to take out the top. If it does take out the top, it measures to 200. So we shall see if that happens or not. But near term, we think a pullback on NVIDIA could happen if S&P pulls back. Palantir, also absolutely melt up stock from near 20 bucks it was in 24 April. Look at where it landed, 9.5 times at 190. A very bearish candle that printed in the month of August. This is a classic spinning top candle, a long wick on the top, short body, and a wick on the bottom of the candle. So that spinning top took over because of the Oracle euphoria, the AI euphoria back in the game. The stock has been up 9% so far in the month of September. We'll see if it sustains after the Fed decision, but that breakdown could take it all the way towards the hundreds is what we're going to watch. But at least the 125 would be a key support level, which previously was the resistance. So we'll see if Palantir pulls back towards the 125. Robinhood has a measured target on its cup and handle. 6 to 66 is $60. At the 60 to 1 to 66 is 126. So far, 3 successive months of kind of bearish wicks on the top, reversal wicks, bearish candles on the 3 successive months. 123 was the high so far for this month. The measured target is 126. From 115 to 126 is $11. It's possible in the next few days it could get there, but from there we are cautious. Look at the extreme overbought MACD, extreme overbought RSI at 86. In fact, Palantir's RSI is even worse at 94. That says how aggressive stocks do when they go vertical, when they have true melt-ups. Another poster child of a melt-up is the storage company, Seagate. Storage being bought like no tomorrow at all the data centers. Look at from 62, it shot up to 195, factor of 3x, climb in a span of just from 4 or 5 months. From April to early September, it's at 195.99, touched 199, pull back from there slightly. This kind of vertical are called classic examples of vertical parabolic melt-ups. Expect sharp pullbacks is what we expect. So be very careful for those looking at Seagate, Robinhood, Palantir, NVIDIA, and Oracle. All of these are classic examples of parabolic melt-up stocks with potential sharp pullbacks ahead. Tesla is just about beginning its momentum climb. A massive breakout has happened on Tesla. So from 214 to 367 is where the breakout came. So that's 214 to 367. You're talking about $153. $153 added to 367 takes it to 520, above the previous peak that we saw at 488 in December of 2024. So that peak is coming. Momentum is on its side. We'll see what they do with their earnings coming up in October, but the stock is gearing up for additional climb. And Tesla just had 2 solid days last week on Thursday and Friday, broke out about the 367, and we shall see if it can reclaim and go to all-time highs at 520. Crypto, Ethereum is for its classic cyclical and the seasonality time setting up. October, November is when it could climb up significantly higher. It's already looking for a breakout above a cup and handle. The cup at 48.65 is the left brim, 883 is the bottom of the cup, right brim at 49.55. That's $4,100 of the depth of the cup. Add to 49.55, 9,000. So that's the potential upside in Ethereum. the way these things move, cryptos, when they go up like crazy. And if Ethereum, according to Tom Lee, is going to outperform Bitcoin this time, it could go an easy double very quickly in a span of the next couple of months. So that's what we're watching. We'll see if Ethereum can get there. The way to play this is look at two Ethereum treasury stocks that have bought a ton of Ethereum to play its upside. One of them is the stock that Tom Lee is the chairman on, called Bitmine Immersion, BMNR. Another one is the co-founder of Ethereum. He started a company. Well, he's kind of invested in one of the SPAC companies and put Ethereum Treasury play on it. It's called Sharplink Sharplink Gaming, SBET. It's another one of those gaming companies like we have seen with the GameStop. But here the play is on Ethereum. GameStop CEO actually is also betting on Bitcoin as a treasury, but the Sharplink one is betting on Ethereum as a treasury. So SBET, SBET, and BMNR are the way to play this massive climb coming in Ethereum. Bitcoin to us has a cup and handle from 69 the left rim to 15.5 to 73.8, measured to 132,000. It's cautiously climbing higher. We can see that from an inside body of the candle into August over July. September is already about to take it higher. The body of the September is pretty much engulfed the body of August and it's about to climb higher. Near term, there might be a pullback. This is what we are painting. It is hitting a key resistance at 117. The bottom of the inverse head and shoulder is 107. And the left shoulder here is 117 to 111.7, back to 117.5, break down to 107.4. So that left inverse head and shoulder, once it breaks out, could effectively take us towards the 126, 127, retest that high of that 124, 125,000 from the the early part of August of this year, and then climb towards the 132 is what we think on this cup and handle. So 69, 15.5, 73, 58,300 added to 73,800 is 132. However, when melt-ups happen, they do overshoot targets. There are people looking for not just 132 all the way to 150 and even as high as 200,000 is Tom Lee's prediction for Bitcoin by end of the year. So we'll see if those very bullish predictions come, but at the minimum 132 is in our planned target for Bitcoin. If the melt-ups come, the upside on QQQ is a lot more. So we can see a cup and handle here from 539 to 401.9 to the 536. That measured target is 670. The measured target on the small cap ETF IWM is all the way up to 282. And the S&P 500's melt-up target, so 6,600 is what it touched on Friday, is at least 700 points higher to 670, 283, 7,300. So there are some that have put a projected bullish target for S&P at 7,000 for this year. So it could exceed and test those if the melt-up scenario. And the only way the melt-up will come in these indices is you got a very dovish Fed on Wednesday on September 17th. With that, let's keep our fingers crossed. The bulls would want the melt-up. Bears would love to see not as dovish a Fed, a bit of a hawkish, those kind of errs into the side of caution on inflation, and from there see a market pullback. So September 17th will be the key day to watch what the Fed does, and this is going to be very volatile, a very interesting week coming up for sure. Good luck investing. We'll talk to you next week. Thank you.